How to get a bigger refund from your IRS income tax payments. Getting a refund from the IRS can feel like Christmas in springtime. Especially if it's a few hundred or a few $1,000s. Forget the fact that you're just getting money back that you already let the IRS take from you last year. You could consider it a gift to yourself. Just don't shortchange yourself. That means you don't want to leave any deductions or tax credits on the table. After all, it's not your responsibility to make donations to the federal government. Here are some ways to get a bigger refund. 1. Make pre-tax contributions to an IRA or 401k. Contributing to a traditional IRA or a 401k with pre-tax dollars means the amount you contribute is deducted from your taxable income. This reduces the amount of income that can be taxed, which in turn lowers the amount of taxes you owe. This means you may be able to get a bigger refund. For the 2022 tax year, the most you can contribute to an IRA is $6,000 per year if you're under 50, and $7,000 per year if you're older. The most you can contribute to a 401k is $20,500 per year if you're under 50, and $27,000 per year if you're older. Your employer may also contribute to your 401k. There are some conditions you need to know about, so it's a good idea to check with a tax expert to make sure you make the most of this opportunity. The second way to get a bigger refund is to choose the right filing status. This is important because it's how your standard deduction is determined. It may also affect your ability to claim tax credits and deductions. As an example, if your spouse dies, you're allowed to file as a qualifying widow or widower for the next 2 years. This status just about doubles the standard deduction you receive if you file as a single. The third way to get a bigger refund is to claim all the deductions you're eligible for. Deductions can help reduce your taxable income and increase the size of your refund. Examples of eligible deductions include charitable donations, medical expenses, and business expenses. The fourth way to get a bigger refund is to take advantage of tax credits. Tax credits are even more valuable than deductions because they directly reduce the amount of tax you owe, dollar for dollar. There are several tax credits available to taxpayers, such as the Earned Income Tax Credit, Child Tax Credit, and American Opportunity Tax Credit. If you have medium to low income, you may qualify for the Earned Income Tax Credit. Not only does this credit reduce the amount of taxes you owe, it may also get you a bigger refund. There are some rules about who qualifies for the Earned Income Tax Credit, so check with a tax expert to see if you can take advantage of this. The Child Tax Credit is worth $2,000 for each child who is younger than 17, that you claim on your return. But don't miss out on the chance to receive an extra tax credit for your daycare costs. Depending on your income, you may be able to receive a credit worth up to 35% of $3,000 spent on daycare for one child, or $6,000 for 2 or more children. Qualifying expenses can include daycare, before and after school programs, summer day camps and sports camps. To qualify, the care needs to be provided so you can work. Most people claim this credit for younger children, but it's also possible to claim it for older disabled children, or even an elderly parent. The American Opportunity Tax Credit is for qualified education expenses for the first 4 years of higher education. You can get a maximum annual credit of $2,500 per eligible student. If the credit brings the amount of tax you owe to zero, you can still get 40% of any remaining amount of the credit refunded to you. You may also qualify for the Lifetime Learning Credit, you just can't claim it for the same year you use the American Opportunity Credit. The Inflation Reduction Act of 2022 may allow you to claim up to a $500 tax credit for replacing your windows with energy-efficient ones, or adding insulation, or other improvements that increase your home's energy efficiency. Going forward, the Inflation Reduction Act may also help you with tax credits and rebates for electric vehicles, solar panels, heat pumps, and more. The fourth way to get a bigger refund is to keep track of your business expenses. If you itemize deductions on your return, your business expenses can be claimed to reduce your taxable income and increase your refund. Number 5 is to deduct state and local taxes on your federal tax return. That could be a lot of money, depending on where you live. Number 6 is to max out contributions to a health savings account. If you have a high deductible health insurance plan, you may be able to save on your taxes by contributing to a health savings account. A health savings account lets you put aside money for medical expenses. The money you contribute is tax deductible. And when you withdraw the money for many types of medical needs, that money is also tax exempt. For the 2022 tax year, you can deduct up to $3,650 in contributions, or up to $7,300 for a family. If you're 55 or older, you can bump up your deductible amount by an extra $1,000. The seventh way to get a bigger refund may be as simple as getting a second opinion. Tax laws are complicated, and always changing. It's always a good idea to talk with more than one tax expert to find out what you might qualify for, in the way of refunds. As with our other videos, our biggest takeaway is how important it is to get dependable answers to your tax questions. Even if you don't know all the right questions to ask. Talking with a tax expert can help you figure out how to get the biggest refund possible. You can also ask questions to help you decide when getting the biggest refund is not in your best overall interest.
To get help with your IRS tax problems and tax questions, please talk to a qualified tax expert. You can work with a CPA, or other tax professional, where you live. Or, if you'd like to get answers to your questions quickly, about your own taxes, you can chat online now with a qualified tax expert. Just click on the link in the comments below this video.